Hello guys, thanks for tuning back into Crypto Mainly. My name's Lee. Just apologies firstly for the lack of videos recently. As you know, I've been developing an automated trading bot called Gbot, and it's taken up a lot of time. So apologies for the lack of videos, but let's have a look, see what's going on today. Please come and obviously like and subscribe, guys, and come and follow me over on Twitter. And our free Telegram group is at Crypto Mainly Public. If you'd like to come and have a look there. So, and also if you want to find out more about the bot, obviously come join the Telegram group at Crypto Mainly Public, and feel free to DM me from there. Okay, so this is on a very small time frame, guys. We're looking at an hourly time frame here for Bitcoin, and as we can see, we can see that from the support and resistance lines on here, we've had some quite nice trading going on within these ranges. We've had a couple of extremes where we've broken out and then obviously gone back into the same pattern. Big fake down here, which we managed to catch in the group. So we were watching for the rejection on a 4-hour time frame. We saw quite a heavy rejection where that green arrow is. So a nice bounce, looking very strong, as you can see. So on a 4-hour time frame, bounced back up and actually reclaimed the support there, and hence we took some long positions from this point, and obviously the rest is history, so they say. We've broken back inside not only the bottom pattern here off the bounce from there. We then obviously reclaimed the resistances. You can see there's quite a clear range bouncing between support and resistance there. We managed to reclaim that, and now we've come back down, retesting the lows. So you've got a nice support line here, which is now created off the back of this volatile move. We've got a further structure here. Sorry, I beg your pardon. Let's just so you've got another bullish structure here where you've got a nice clear pattern forming here. So nice bullish structure. So you've got lows, and then you've got a high low, you've got a neckline, and you've got a breakout, come down and retest. So it's quite possible we come all the way down to the support there at about 105,500 to 105,700, and then we get the bounce from there. If I just have a look and show you the measured move of that particular structure there, then we're looking at around about a move of up to 111,000. So that's the measured move from this high point here down to the low, and then obviously the projection out from that would be 111,000. Probably, I think, actually, somewhere in between there would probably be more likely when we consider that the all-time high is 109,000, which is marked. I'll just mark that on the chart here for you. So the previous all-time, or the recent all-time high, if you like. So now you've got the all-time high mark there, 109,354. So if we go back to that hourly time frame, you can see that it's likely that we at least come in and attack that range somewhere. I wouldn't be surprised if we get up to the 100, the 1.618 there at 109,844. It would make sense that we just break up and then just break the highs, and then I think we're going to get a rejection, which we'll come to in just a moment. So short term, guys, if we can hold this neckline as support here, then I think actually we're going to have an attempt, another attempt at the all-time highs here. But I do think, guys, that we are setting up for a big bull trap here, to be honest. I mean, I think that we're going to, once we get up into these levels of the actual high 109,000, I think that we're going to be in quite precarious territory there in terms of if you look at the higher time frame indicators, it does look like we're going to get a pullback in actual fact. So let's have a look at the higher time indicators. This is a chart that I put up yesterday, which is all looking very nice. You've got golden crosses as you've marked there. So golden cross is the 50 simple moving average crossing above the 200 simple moving average. So in this instance, obviously the slow moving average is the 200 is the blue, and the faster moving average is the 50 SMA. So green 50 SMA, blue 200 SMA, and you can see that whenever that you get that cross, 50 crosses up above the 200 SMA, called a golden cross, and then obviously you can see what happened after. So I draw my little rockets there because obviously you get some nice moves, which we'll come back to in a second. But just overall, generally, rather than looking at micro detail, you see that generally it is the start of the next point of of at least a nice move every single time in that instance. let's just, if you break that down slightly, if you start to look in a little bit more deeply, you will see when the golden cross happens, you can get, initially you do tend to get a little bit of a pullback just after. Okay, not every time, but you'll notice if you look at each iterations of this, you can see that you do get a pullback of some sort just after. So if I could just make that a little bit more clearer for you. So if we look at when we got the golden cross here, right in this line, you've actually got a pullback there. It doesn't look actually very big on this chart. As you know, this is a logarithmic scale. Let's see what that looks like. It's not huge, but it's significant enough to be aware of. Let's have a quick look. See what we can get. Can't see where the bottom of that is. So yeah, let's just try and do that without the magnet. Let's see what that looks like from there. So yeah, so it's about a 13% move. So not horrendous, but albeit it was only the start of the bigger move to the upside. Same here. You've got the golden cross. Oh, sorry. Yeah. So this one, the golden cross actually happened just price was taking off. We had the golden cross, but then obviously we had the COVID immediately after. So I got a bit confused then. So yeah, immediately after we had the COVID crash. So we could kind of disregard that one. As soon as you got the next golden cross here, once again, you get the golden cross right there, and obviously you then get pullbacks. Okay. And then obviously you get ultimately the direction is up. Same here, golden cross here, you've got the pullback and then the direction's up. Same here, golden cross, pullback, direction's up. And here, not so much here. Obviously this is the bull market that we're in now, is very powerful. So we've got the golden cross there, and obviously it was just up and to the right basically, no sort of pullback there at all. And then golden cross here again. There's the peak of the high, golden cross, and you do get a dip, and then obviously then you get continuation to the upside. So the golden cross actually in actual fact hasn't happened yet. It's due to be happening very soon. Just zoom in and I'll have a quick look, see just how far away we are. So I mean very, very close. You can see that each day it's getting closer and closer. It hasn't actually crossed yet though, guys, so you need to wait for confirmation for it to actually cross, as we know. And there are a few warning signs, guys. I mean, this golden cross is going to happen. I don't think there's any doubt about that. This is obviously, if we go back here, guys, just something to point out to you. If you go back to, this chart particularly goes back to, January 2019. So you could say that, I'm just looking at the bull markets here. In fairness, this is obviously last bull market, and this is the current one that we're in. But from another perspective, guys, if you look at that, that's the beginning of 2019 here. Okay, so we're now at the beginning of 2025. So, we're talking about 6 years here, and you've got 1, 2, if we disregard this one, 1, 2, 3, 4, 5, 6, and hopefully the 7th. So you only actually get one of these golden crosses about once a year. So, I mean, they are significant and they are something to be aware of. But as I say, it's not to say that we won't get an initial pullback and then take off. Okay, some of these pullbacks, as you can see, I mean, for this one here, for example, if we go from the, sorry, I think I missed the top there. Let me try that again. Let's go from the top to the bottom. To the 20% pullback after the cross. So, it's something to be aware of. Let's just zoom in and see if we can get a little bit closer look at that. So yeah, so from the top there, so you get the golden cross here. Okay, and then obviously you've got 22% correction there. It's significant and something to be aware of and something to watch out for. And we've got obviously this golden cross here, and then the pullback. This one's a little bit shallower, but we'll have a look anyway and see what that looks. Bear in mind, it's a logarithmic scale, can be misleading. Yeah, so not so bad. That one was a 10% pullback, but so again, guys, it's not going to be disastrous. I mean, we could get anywhere between a sort of 10 and 20% pullback, which incidentally I think is probably somewhere close to what we should expect. I think from 115,000 we'll probably get down to low 90s again, and then obviously we'll have to see what the market structure suggests then. But I just want to show you a couple of things, guys. If I just open up if we go back through history prior to this, I did have a quick look back. If we go back through, I did have this all set up, but obviously the chart's moved because I've been moving it on the other one, I think. But anyway, okay, so there's a couple of examples here when, prior to this date range we're looking at here. So, where you've got a golden cross there, which as you can see at the bottom there, that's July 2015. And this was, this was very early days here. This one here is, February 2012. But I mean, again, guys, just look at the golden cross. Okay, you've got one there, February 2012, and then you've got the next one potentially was July 2015. So again, they don't come about very often, even in the early days of all the volatility. They don't come about very often, so they are worth noting. The reason I've looked at these are the only two that I could find where you get a golden cross on the daily, which didn't work out. And I'm sure that those of you that have got the trading experience and the BDIs can see the main difference between these golden crosses and the ones that you've worked out here. And if you haven't seen that, guys, you can see the blue, once again, the green is the fast moving average, the 50, and the blue is the 200. Okay, so very simple clue for you guys. If you're watching for moving averages and things, you can see that the direction of the moving averages is actually down. Okay, so the slow moving average here at the 200 is actually moving down when the golden cross happens. Okay, and the same here, 200 is moving down heavily there when you got the golden cross. Okay, this one, although you could argue that you got quite a heavy correction afterwards, ultimately it still worked out anyway. But I mean, this is in the very early days of Bitcoin, but strictly speaking, the golden cross didn't work out there and the prices came down. Strictly speaking, the golden cross didn't work out here and prices came down. But then again, once the second golden cross happened, it was off to the races again. But these are the only two that I can find, basically, guys, that didn't work out. And the reason is, as you can see, the 200 SMA is heavily pointing down. Okay, if you look at all of these golden crosses, the 200 SMA is pointing up. Okay, so where are we today? A very nice, healthy blue 200 moving average moving up, 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 up. And the green is about to move up, and obviously the green is crossing up through a 200 moving average, which is moving upwards as well. So nice, something nice to look forward to. Just one other thing, guys, for those of you that don't know, that you might want to think about is if you're looking at moving averages, and particularly on a chart, if you notice that when the moving averages actually cross close to the price action, so a good example is here, you've got the actual price is very close to the moving averages at the point of the cross. Okay, and then this was one, if you remember, that we didn't actually get very much of a pullback. And the reason for that is that the price action is actually very close to the moving averages as they converge. And then obviously you get the reaction. As you can see now, same again here, price is very close to the moving averages, and then you get the reaction. Okay, very nice, strong reaction. What I will say is price is quite far away from these moving averages. So this is actually a weaker signal, incidentally, than these ones here. And you're actually more likely to get a pullback into the moving averages because the crossover, the price is actually further away from the moving averages at the point of the crossover. So just trying to see another good example. For example, if you see the golden cross was here, price action was quite away from the crossover, and then obviously then obviously you got corrective action afterwards. Not very much, but again worth noting, and the same here. So just a little tip for you there, guys. If you see price action and you're looking at moving averages, if price is converging and reacting where the moving averages are, that tends to be a stronger signal. Okay, so let's just have another quick look. There's a couple of things also I want to show you, just like points of concern, really. If we have a look, I'm just going to bring up a couple of indicators now. If you have a look at the RSI, so I mean, if you have a look at the RSI, as we mentioned before, guys, once the price action gets into the bullish control zone, so once the price action comes up and enters the bullish control zone, that's the point when the price starts to accelerate. And once it's up there, whilst it's in the bullish control zone, price continues to get continuation. When it loses the bullish control zone, that's when you tend to get the corrective price action. Okay, so I just want to show you a couple of things here, guys. Namely, let's have a look. You've got, so obviously, we're at all-time highs now on the price. So the top of the top is, if you like, it's flat, and you've got bearish divergence here on the RSI. Okay, I think it's we need to be aware of these things, because if you start to ignore things like that, then you end up it ends up costing you quite heavily, in my opinion. So again, if we look at the MACD as well, if you have a look at the MACD is actually starting to look like it's trying to turn back down. In fact, if we zoom in a little bit, you'll see exactly what's happening here. So the moving average has crossed to the downside, and now it's having a job to break back above the moving average again. Not saying that it won't, but it's certainly something you can see. You've got a high, lower highs there, and obviously it's breaking the low here. So if it does break the low here, that's confirmation of the bearish divergence in this area here. So then obviously we're looking at further downside there, or at least some initial downside. I don't, the bull market's full force now, guys. I don't think this is going to be horrendous, and I don't think it's the end of the bull market or anything ridiculous like that. But you can see, my views, guys. 180 to 320,000, and the cycle ending, October, November this year. So again, guys, you've got here, so you've got a bearish divergence here on the histogram. Okay, so you've got you've got a high highs, and you've got lower lows and lower lows. In fact, this is starting to turn red now on the histogram. So again, we need to watch these things, guys, because if you ignore something like that, there's clear warning signs, then it ends up costing you. And I think that particularly this time of year in May, it's the worst time. This is the time to be caught out. I'm just going to show you a custom indicator that I've built myself as well, just to show you what that's telling us. Just going to, so yeah, so same again, guys. You can see, if we just look at an overall picture, you can see that the red, once the red block starts to appear, it's at the point when the red block starts to finish and turn white again, that you get the corrective action. If you look back through, you'll see the red stops, starts to finish. You get momentum and things crossing down, and you get these these pullbacks. So again, you get the idea, guys. If you get nice thick red instances like this, it can stay red for a long time, as you can see there. But what you're looking for is the red to stop, and then the moving averages and things to cross on here. And as you can see, it wasn't disastrous, but you got nice corrective sideways action, sideways at the least, and corrective at worst. Again, they're not too bad. Again, strong bull market, got corrective action. But yeah, you can see that this is firing off some warning signals to say be a little bit cautious here, guys. Again, you can see the bearish divergence here on RSI. RSI is here on purple, and this is momentum and volatility built into one, along with volume on this particular indicator. And you can see that you've got bearish divergence there as well. So the warning signs are there, guys. And whilst I think there may be another stab up into the actual high 109, 110,000, I think that we've got to be very careful and certainly protect yourself. I think be more cautious at this stage. If we do get rejection, the price comes down, then the moving averages can start to diverge, and then obviously the golden cross won't happen anyway at this stage. But not to say that it won't happen, but just it will just take longer to do that. So if we can have a look as well, just for those of you that are interested, this indicator here can actually be moved onto the chart as well. So move this. Basically, it's the same indicator as at the bottom here. This is the blue lines here are it's momentum, volatility, and volume. Purple is RSI. Okay, the darker lines there in the background are percentage K and percentage D of the stochastic RSI. Okay, and then obviously if we project them onto the charts, it shows you the areas of red, the danger areas, if you like, and obviously the potential green areas for potential bounces as well, which is, as you can see, it catches very nicely, and obviously it works from Bollinger Bands. So if you look on the Bollinger Bands as well, you'll also see that the tip of the Bollinger Bands, we've come up, we've hit that, we've corrected back down, not quite to the mean, but very close to it, and got another bounce there. And obviously, it makes sense that we would normally see another test of the the Bollinger Band at the top there, which, as you can see, is the former, is the actual, previous or recent all-time high, 109,000. And so again, it's suggesting 109 to 110,000 first, and then before we can then re-establish and have a look at what is actually happening next. So just have a quick look. This chart's interesting. We've been looking at this for a long time, guys. So the hash ribbons indicator. What I did notice actually is that the hash ribbons indicator, we did get a blue buy signal, which has actually changed now. So, we were watching this for a long time. We had a blue buy signal at the bottom here. That's actually disappeared. If you go down on the weekly, it's not there. 5-day, it's not there. 3-day, it's not there. 2-day, it's not there, and the 1-day, it's still not here. So what does that mean? Basically, what's happened is, I mean, you can look at this two ways. If you look at the capitulation on previous, it 80% of the time, it leads to downside, sideways at best, but generally speaking, 80% of the time or more, it actually leads to downside price action. So another thing which is suggesting that that it's going to be downside price action for the sort of medium term. But one thing that I would say, guys, is you get the capitulation and then afterwards you get a buy signal. So you could look at this as a really promising thing, because when the buy signal actually fired, we measured the average move 143%, took us up to 186,000 and some odd. So let's say if we come back down to about 90,000, we'd then be measuring the move from there, which would take us to 200,000 plus. So you can look at it two ways. Corrective price action from here is going to lead to a longer bull market, which will likely head till later in the year, which will be great. And obviously the projected move then from this average, bear in mind this is an average, you can get larger moves, in which case we could be looking at, as I've said for a long time now, 180 to 320,000. There's all sorts of indicators that we've spoken about before, and charts and things which I've shared that point to that price target, 180 to 320,000. That's where I think it's going to end up. Incidentally, guys, I did feed all of the information into AI, just all of the different things that I've got, talking about fib extensions in terms of fib timescales and projection of price and things like that. And the overall summary came back to say that 500,000 is not impossible, depending on adoptability, etc. But it did say that in its opinion, it thought that somewhere around the sort of 250,000 price mark would probably be sensible for this cycle. So bear in mind, I think 120 to 320,000. Maybe if we get to 250, we start scaling up for 250,000 plus. Maybe start scaling out of crypto at that point. And look to the heavens. So thanks very much for listening, guys, and I look forward to speaking to you again next time. All the best now. Take care.